Here with us now, co-founders of Market Rebellion, Jon and Pete Najarian. Guys, great to see you. Thank you so much for coming on today.
Great to see you.
Pete, I'll start with you. Monday, a whole new day. Have the markets had enough time to adjust to Trump's new tariffs? We know markets are anticipatory, so what can we expect?
Well, I think you can expect a lot of conversations from the president himself trying to give us a definition of any of the countries that want to get into a negotiation. And I think that's why we'd seen this big, broad move. 185 countries. That's an amazing number. And when you see what's going on, it certainly did shake the markets in a big way, as you just mentioned. I mean, in 2 days, we were up 40% on the VIX one day and 60% the next. And for the entire week, we were up about 80%. So there's definitely some concerns out there, and we've just got to see if the markets can start to adjust to some of these numbers. But it's all going to come down to, are the other countries willing to come to the table with the president?
Jon, let's speak specifically about China. They struck back hard last week with a reciprocal 34% tariff on U.S. goods. Do you see other countries hitting back in the coming days? Or we've already seen Vietnam and Israel saying they're coming to the negotiating table. Could we see more countries wanting to do that?
Oh, I think you'll see a lot more countries willing to do that because this is painful on both sides. It's not just a one-way street. Obviously, we're feeling pain, and Pete just described how the markets are dealing with that pain, but the same thing is being felt throughout the globe. I mean, virtually every country is feeling the sting, and China, they are starting to slow down the factories. They will dramatically cut back on production of goods, in particular to their biggest customer, us. So it's a question of how long does the populace in these countries put up with it, just like it is for us. How long do consumers in this country put up with it? We're about to see how much the impact is, as you were saying already, about coffee, about wine, about avocados and so forth. The big ticket items, people can put those off, or perhaps they can buy used cars and things like that. But right now, I think the issue is that with this going on, people are unlikely to accelerate or to retaliate. They're more likely to come to the table.
Yeah, you're talking about a time frame. Pete, we keep hearing the phrase short-term pain. Trump admittedly saying the tariffs could last 2 years. What should American consumers be prepared for? Are we ready for 2 years of the current economic situation?
I don't know that we're ever ready for 2 years worth of that, but I think that the reality is that when he said there's going to be some bumps in the road, when he talked about this could be a little bit of pain, and we all knew that there was going to be some pain. I think a lot of people just didn't realize how quickly and how much pain in 2 days really would hit the markets. That's exactly what's happened. And so I think that in the longer term, I don't think it's a 2-year fix. I think this is something where the president's going to have not only the negotiations, but I think even the power part of this whole thing when these other countries start to feel that pain. And that might take a little while. 2 days is not the number. I think it's much further out than that, but it's not 2 years. I actually view it more in quarters. And I think that we could really bounce back in a big way if everybody's willing to come to the table with this negotiation.
All right, I love that optimism. Jon, JP Morgan now predicting the likelihood of a recession is at 60%. Too late to reverse this? If not, how?
Well, one way, right away, will be interest rates, because Jay Powell has dug in his heels and really does not want to say what the bond market is already saying. The CME Fed tool says that we're looking at up to 5 cuts. The Fed is only talking about 2. So the bond vigilantes that sometimes push against what the Fed is saying are pushing really hard right now, saying that we might see a 3% interest rate within calendar 2025. So in terms of how would that impact consumers, that would be a very strong positive for consumers, because that's mortgage rates, that's interest on credit cards, that's new car loans, used car loans, all that kind of stuff. So 5 different cuts this year would be a very positive thing. And basically, they're really pushing hard against the Fed. And I don't think Jay Powell will be able to sit back and just say, nope, we're going to be stubborn and keep it at 2. I think they might even make a cut between meetings at this point.
We also know Trump loves his loyalists. Pete, the idea behind these tariffs is to jumpstart American manufacturing. But as automation and AI take over jobs, another facet of the story is, are these jobs that we want to bring back to the United States?
I think absolutely. We need to get some of these jobs back. And the reason that we went other countries was sort of that selfish reasoning, right? I mean, it's so less expensive and you're dealing with a much different society and so forth, especially if you're looking at somebody like China. So I think it actually could be a very big positive. It's just a matter of how long will that take? I think when we look at that side of it, that this doesn't just turn with the switch. It's not like we suddenly have manufacturing capabilities immediately. So there is some time frame there as well. And during that time frame, I think that does include a little bit more pain as well.
Some of the biggest stocks in the world can be had for huge discounts right now. Should people buy the dip? John.
Pete's point, I think that we're not likely to see the pain subside to the consumer for perhaps 1 or 2 quarters. But the stocks have to be a forward pricing mechanism, as you know, Hena. So I think picking up some of these stocks, when you look at in particular Apple and Amazon, I think, yes, these are stocks that I would be picking up. Apple is already a large part of my portfolio. Tesla, surprisingly, is still $30 higher than the lows that it hit on March 10th. So I think there are consumers as well as, of course, institutions that are out there shopping right now. And a 2-day drop like this, if it would have bled out over several weeks, I think people might be a little more patient. Right now, they might be looking for some rebounds, in particular if we get news from negotiations with Vietnam, obviously, Mexico, China, Canada, and so forth.
Yeah, I wonder how Americans are going to respond to a potential $2,300 iPhone, but we'll see. I know this is your first time on the show, gentlemen. We hope you come back. Thank you so much, Jon and Pete Najarian. We appreciate it.